Okay, so taxation. Students, taxation means portion or part, or you can say contribution. So tax is basically part of your income which you will contribute towards the state against the facilities which you are receiving from the state. So for example, your state, your government is responsible for providing security services, your government is responsible for providing health and safety, your government is obviously responsible for providing safe infrastructure, secure infrastructure. So there are different facilities which every state is providing to its citizens. So against those facilities, everybody is going to contribute something. So that portion, that contribution which we make towards the government against the facilities which we are receiving from the government is called taxation. So contribution against the facilities which we are receiving from the state is called tax. So, as you all know, there are two types of the tax. There are two basic classifications of tax. One is indirect tax, and second one is called direct tax. Before we move towards these terms, the tax authority, the body in the UK which deals with the taxation matters, is called HMRC. So HMRC is the taxation authority which deals with the tax matters in the UK. So HMRC stands for Her Majesty of Revenue and Custom. Her Majesty of Revenue and Custom. So HMRC is the tax authority in the UK. This is the tax body in the UK. So the tax which is paid directly to the HMRC, directly to the tax authorities, is called direct tax, while on the other hand, the tax which is indirectly paid to HMRC through a medium, through a tool, through a source, the tax which is paid to HMRC through a source is called indirect tax. So these are the two types of the tax. And in our syllabus, the type of the indirect tax which we will discuss in taxation paper is VAT. In some countries, it is also called GST, General Sales Tax, and in some countries, it is called sales tax. But as far as UK taxation is concerned, it is called value added tax. So the only type of the indirect tax in our syllabus is VAT. On the other hand, if we move towards the direct taxation types, there are different types of the direct tax. For example, first of all, income tax. Income tax means tax on income. So the tax paid by an individual on his income is called income tax. Tax paid on income. Tax paid by an individual on income. Tax paid by an individual on income is called income tax. In the same way, next type is capital gains tax. Capital gains tax. Tax paid on capital gain. There is difference between income and capital gain. So capital gain is basically profit on disposal of non-current assets. So whenever an individual is going to sell a non-current asset, obviously he's earning profit on that asset. There are chances that you may have capital loss on disposal of asset, and in that case you are not going to pay any tax in case of losses. But if on disposal of a non-current asset you are earning profit, you have to pay tax on that profit, and that tax is called capital gains tax. So tax paid by an individual on capital gain. It is called capital gains tax. Moving forward, inheritance tax. As the name explains by itself, tax paid on inheritance. If you are going to inherit anything, obviously you have to pay tax. So tax paid on the inheritance is called inheritance tax. Next one, corporation tax. Corporation tax. So corporation tax means tax paid by the companies. Different companies pay tax on their incomes and profits. So the companies pay tax is called corporation tax. The, the tax which is paid by the companies is called corporation tax. So these are the basic types of the taxation which we will cover in this paper. So these are the different areas of this paper. For example, the first area of our syllabus is income tax. Second area of our syllabus is capital gains tax. Third area of our syllabus is inheritance tax. And in the same way, fourth area will be corporation tax and fifth area will be value added tax. So these are the different areas which we will cover in this paper, in this taxation paper. We will cover all these areas one by one in our taxation paper. So, sequence of syllabus coverage. So, students, first of all, we will cover capital gains tax. In short, it is called CGT. So, the first area which we are going to target is capital gains tax. After that, we will cover IHT, inheritance tax. Third area would be value added tax. Fourth area would be income tax. And at the end, we will cover corporation tax. So we will cover our syllabus in this sequence. So these three are comparatively small areas. So that's why I'm just going to target these areas first, because at the start of our syllabus we will cover all these three areas, and obviously it will release our attention that we are going to cover only remaining two areas when the last month of our syllabus will start. So we will cover our syllabus in this sequence. So students, until now, if you have any questions regarding the syllabus coverage, you can ask. Okay, so the next thing is the weightage. So students, the most lengthy area of our syllabus is income tax. So income tax is almost it's just my estimate. This it is just a rough estimate. It's just a rough estimate. This is not hard and fast rule. So almost 40% of your syllabus is income tax. Almost 35 to 40% of your syllabus is income tax. So I'm giving this weightage as per my approach. Obviously, every teacher has its own approach to cover the syllabus, but I'm allocating this weightage as per my teaching approach. So when I will be teaching, I will spend 40% of my time on income tax, and I will spend 15% of the time on corporation tax. I will spend almost 35% of the time on CGT and IHT, and I will spend remaining time, almost 10% time, on the value added tax. So approximately, I will allocate the time on these areas accordingly. The next point is study material. Students, first of all, I will provide my own notes. Smart Study has its own notes for every paper. So we will provide smart notes, and these smart notes will cover your whole syllabus in just 40 pages. So these notes are famous all over the world, and these are very concise, very comprehensive notes. So we will provide our notes first of all. So we will cover the whole syllabus with the help of these notes. Unfortunately, unfortunately, these notes do not contain examples. So because there are a large number of examples, and as you all know, every year taxation rules will change, and it's almost impossible to update every single example. So that's why we will use Kaplan book. We will use Kaplan book for we will not read the book, and it's very beneficial if you will be able, if you have time to read the book, it would be very beneficial for you guys. But at minimum, you should practice examples and test your understandings from your Kaplan book. So when you will practice all the examples and test your understandings from your Kaplan book, then almost 60% of your syllabus will consist of MCQs. And after practicing all these examples and test understandings, you will be able to grasp each and every point. And it will be very easy for you guys to tackle the MCQs portion, which is almost a 60% portion of your paper. So we will use Kaplan book for examples and test understandings. So we will practice few examples and test understandings in our classes, and rest of the examples will be your assignment. So on daily basis, you have to practice. For example, if we have covered one or two topics, it's almost understood that it's your assignment that you should practice examples and test understandings from your Kaplan book regarding those topics. Next, students, we will use Kaplan Kit. So we will cover Kaplan Kit in our classes, and we will be able to cover kit questions at the end of every area. For example, first of all, we will cover CGT, and once we have covered C capital gains tax, after that we will practice all the questions regarding capital gains tax from our Kaplan kit. So these are the three basic resources which we will use to cover the syllabus. And after that, the most important thing, the key to pass this paper, is my unique approach, which are flowcharts. I used to say mind map. So mind map is basically a revision technique. So I will provide at the end of every area, for example, when we will cover capital gains tax, I will provide only one page for the revision of capital gains tax. And you will be able to check yourself whether you are able to memorize anything or something is missing. So you can check yourself with the help of this mind map approach. And this approach, this mind map methodology is very, very important if you want to pass this paper in the very first attempt. So I will provide mind maps of every area. It will be just one page revision technique. These are not the notes. Please don't confuse. Mind map are not the notes. Mind map is basically revision technique. So I will provide mind map of every area at the end of the coverage of that area. So this is all about study material. If we will discuss the paper pattern, students, we have three parts. Part A, there will be 15 MCQs in the part A and having 2 marks each, so 30 marks in total. Part B, students, in the part B, you will have 3 scenarios. And from every scenario, you have 5 MCQs into 3. So there will be 15 MCQs in total. And 2 marks each, there will be 30 marks in total. And in the section C, in the part C, there will be 3 questions, 3 long questions. Question number 1, question number 2, question number 3. First question will be of 15 marks. Second question once again of 15 marks. And third question will be of 10 marks. So in this way, you will cover 100 marks paper. So students, your examiner has mentioned that there will be one question, one 15 marks question on the income tax. There will be one 15 marks question on the company, and 10 marks question will cover any area. Your examiner can set 10 marks question on any area. Either it can be on value added tax or on the capital gains tax or on maybe value added tax. So your examiner can target any area for these 10 marks. So this is your paper pattern. Okay, so so the very first area which we are going to start is capital gains tax. So what is capital gains tax? Tax paid by an individual tax paid by an individual on his capital gains. So this tax is specifically related to capital gains. So tax paid by an individual on his capital gains is called capital gains tax. So there are different terms which we need to learn if you want to learn capital gains tax. Whenever a taxable person um, makes a disposal of chargeable assets, whenever a taxable person makes a disposal of chargeable assets and as a result of that disposal realized chargeable gain or capital gain. On that chargeable gain, he has to pay tax that is called capital gains tax. So these are the three, four different terms which we will discuss in a while. So first of all, whenever a taxable person makes a disposal of chargeable assets and as a result of that disposal earned a capital gain. So the tax paid on that capital gain is called capital gains tax. So let's discuss these terms one by one. The very first term is taxable person. Taxable person. The person who is going to pay tax. For example, if a person is UK resident, so in the exam, it will be mentioned that either a person is UK resident or not. We will cover detailed rules about the residency status of an individual in the income tax topic. So if you want to learn the rules regarding the residence status of an individual, you have to wait till income tax. So for the time being, it will be mentioned in your question that if an individual is resident or non-resident. So anyways, if a person is UK resident, he will pay capital gain tax on sale of UK and overseas assets. So a UK resident person has to pay tax on both the assets. Either he is going to sell UK assets, alternatively, he is going to sell overseas assets. In both cases, he has to pay capital gain tax in the UK. So all the assets, either in UK or in overseas, are chargeable assets if an individual is UK resident. Non-resident in UK. If a person is not resident in the UK, if a person is not resident in the UK, in that case, he has to pay tax on UK land and building only. So these are the two different terms. If you are UK resident, you have to pay tax either you are going to sell any UK assets or you are going to sell any overseas asset. But on the other hand, if you are not UK resident, then you will pay capital gains tax in the UK only on sale of land and building which is situated in the UK. That's it. You are not going to pay tax on any other asset apart from UK land and building. So these are the two different terms regarding the taxable person. There are two types of taxable person. Maybe a taxable person is UK resident, maybe a taxable person is not UK resident. So this is the difference between different types of taxable persons. The second term is disposal. Students, in the taxation, disposal means transfer of asset. Whenever you are going to transfer any asset, it means disposal. Disposal means transfer of an asset. For example, asset can be transferred in multiple ways. For example, if you are going to sell an asset, so sale is an example of transfer of asset. The very common example, the very first example is sale. Second one is gift. If you are going to make a gift, but in case of sale and gift, the calculation of taxation will vary. Obviously, there are different rules for the calculation of gain or loss in case of sale and in case of gift. We will cover these rules in a while because most of the students will ask how to calculate gain if you are going to make any gift, because in the case of gift you are not going to receive anything as a consideration. So if you are making a gift, you are transferring an asset and you are not getting anything in return. So how to calculate gain or loss? So tax law provides guideline for the calculation of gain or loss in case of gifts, and we will cover later on in this chapter. So right now I'm just explaining the methods of transferring an asset. So if you are going to sell, asset will be transferred. If you are going to make a gift, asset will be transferred. Next one is maybe theft. So in case of theft, asset is transferred by the will of Allah. Then maybe destruction. Asset may be destroyed, maybe due to some sort of accident, maybe earthquake, maybe for that natural incidents, maybe earthquake, maybe flood, maybe due to fire. So asset has destroyed. So there are multiple examples. So if you have transferred the asset by any means, it means it's going to be a disposal and there will be CGT implications. So whenever you are going To make a disposal, whenever you are going to transfer an asset, there will be CGT implications. Just keep in mind. The next term is chargeable assets. There are few assets which are exempt from tax. Tax is not applicable on few assets. Chargeable assets. So tax law provides a list of exempt assets. So what are the chargeable assets? All assets except exempt assets. So all the assets are called chargeable assets other than those which are classified as exempt assets. So we will cover the list of exempt assets in detail, but there are 2-3 broad categories of the exempt assets. First of all, current assets. All the current assets are exempt in CGT because capital gain tax is a tax which specifically relates to non-current assets. So all the current assets are exempt. All the debts are exempt. For example, if you have purchased loan notes and you are going to sell those loan notes on a profit, so loan notes, debentures, price bonds, all these types of debts are exempt in the capital gains tax. And finally, cars. All types of cars are exempt in the capital gains tax. So these are the few types of exempt assets, and all the assets other than exempt assets are called chargeable assets. So if you are going to sell any non-current assets other than these, that asset will be a chargeable asset. And if you have earned the profit on sale of that asset, you have to pay capital gains tax. So we have covered the very first term, which is taxable person. We have covered the second term, which is disposal. We have covered the third term, which is called chargeable asset. And the last term is capital gain. How to calculate the capital gain? Answer is very simple. How to calculate gain or loss? Capital gain. So, since the method for the calculation of capital gain is very simple, so you will write down selling price. Obviously, you will deduct your cost. You have capital gain, or also called chargeable gain. And you have to pay tax on this chargeable gain or capital gain. This tax is called CGT. This tax is called capital gains tax. So this is the basic theme behind the calculation of capital gains tax. So if you have any questions, you can ask.